Hey guys, and welcome to today's episode of That Crypto Show, where we are going to do a deep dive into the question whether China can crash the crypto markets. So stay tuned, we have a lot of information prepared for you, and I'll see you in round about 20 seconds. Welcome back. So if you're a regular watcher of That Crypto Show, you might have noticed that around about 2 weeks ago, we already did a video about a potential crisis brewing in China. If you have not watched that video, we'll leave a link up here for you to catch up on that. And we want to touch base on that topic again today, because in my opinion, it's really the one hot topic, or actually two topics, as we will see later, that are currently moving the markets. And you might have noticed, in the last days that Bitcoin and other cryptocurrencies are kind of in a state of shock. We saw some great upwards move again until 45,000 last week on, I think it was Tuesday and Wednesday, just to slump down again. And this is due to a reason, of course. There was this message coming out that, China once again has banned cryptocurrencies, but this time really they are very, very serious about it. So it's not just, as you might see out there on some Reddit or Twitter posts out there that China once again is banning cryptocurrency. So this time really they are very, very serious about it. So every transaction, ownage of cryptocurrencies is now forbidden in China, and we are seeing crypto exchanges such as Huobi who are already not onboarding new Chinese clients anymore, and who have for existing Chinese clients a grace period, I think until December 31st, to close their account. So this is of course because China wants to enforce their own digital currency called the digital yuan. So this is essential bank issued cryptocurrencies. Cryptocurrency has been already in use for quite some while now in China, used in daily life. So they're in a test phase, and they are going to roll this out into the broad public. And of course, they feel the likes of Bitcoin and co are like competition for that. But this is only one side of the matter. And I mean, we saw some reaction after this news here on what I think it was Thursday, when we went down again. But notice all the wicks, as I said yesterday on That Crypto Show. So it seems like this area around 40 and around about 41,500 or 41,500 and 42,000 is also an area where you have a lot of long-term holders, hodlers, buying up Bitcoin again for what they think are cheap prices. All right, but we don't want to go too much into technical analysis at the moment. I think the more is because, this is now, China has gone all the way, banning totally cryptocurrency. So there is nothing really in terms of banning, in terms of regulating cryptocurrencies from China that can top this anymore. This has been done. We have seen all the miners move away from China. This was accompanied by a drop in the hash rate of 46%, which has slowly recovered now as well. And so there's not so much China can do anymore. So might be that we are finally rid of this China FAT when it comes to banning and regulating cryptocurrencies. For me, the more important thing that we need to talk about in terms of China is Evergrande. And I've talked about this in the past 2 weeks on and off quite a lot, because I think it could send ripples really not only through the crypto markets, but in general throughout all the financial markets worldwide. And there are a lot of people out there that maybe start trading cryptocurrencies, that slowly get into this type of financial asset, that think that cryptocurrencies are isolated from other financial assets out there, but this is really not the truth. And we saw this again last week also, when the stock markets go into a so-called crash mode, a severe risk off mode, so where you see like stock markets going down by 4 or 5%, you can be 100% sure that you also see Bitcoin going down. So there's a high correlation between the stock markets and cryptocurrency market when it comes to downside moves, that is. And we've covered this in detail in earlier shows already, so I'm not going too much into this, but the ticking time bomb at the moment that's kind of holding the classical asset markets, the stock markets, the bond markets, the currency and precious metal markets in a shock is really Evergrande. So the Chinese real estate developer that has 300 billion US dollars of liabilities that they might not be able to pay back. And there has been some development end of last week, which I think points into the direction that this whole thing is going to continue to develop. Now, in terms of debt, in terms of liabilities, those 300 billion US dollars, we have to differentiate between so-called onshore liabilities and offshore liabilities. Onshore liabilities means, in the case of Evergrande, that those are debts, those are liabilities that are denominated in the Chinese currency yuan. So, I think like this article highlights it very well. So you have liabilities or interest rates on those liabilities, interest payments that you have to pay back, that Evergrande has to pay back in Chinese yuan. And there are liabilities that need to be paid back in US dollar. And very interesting last week, in my opinion, was that there was an interest rate payment done in yuan, which was done by Evergrande, and there was an interest payment of, I think it was 85 million US dollars that was supposed to be in US dollars, which was not done by Evergrande. So in my opinion, this points a little bit in the direction that China is trying to get Evergrande to at least, pay the interest due in local bonds, to support the local market a bit, because it's not just about those 300 billion US dollars of debt. There's like a whole red tail connected to this. So if Evergrande defaults, it's not just 300 billion US dollars around about down the drain. There are industries connected to this. There are domestic banks connected. So Evergrande owes money to around about 171 domestic banks and to 121 other financial firms. And this could very, very quickly lead to a situation that we also saw in 2008 after the default of Lehman Brothers, where the banks become very, very restrictive in doing loans out to other companies. And if you are running a small or a semi-large company, you are, especially if you're producing items, you are very dependent usually. You're not going to finance all your production out of your own cash, out of your own equity. Normally you'll get loans from the bank, short-term loans to finance your production, so you can, and then you pay back those loans once you've sold your production. So it keeps the economy running, so to say. And if we see the same effect like 2008, we would see that domestic Chinese banks are not giving out loans anymore, which would not only lead to a default of Evergrande, this would potentially also lead to defaults and slower economic activities in other industries. So there's really a whole red tail connected to this. And this fact that the interest on a so-called onshore bond last week was paid, but not on an offshore US dollar denominated bond, for me hints into the direction that the Chinese government is trying to push Evergrande, to protect, to focus on paying back interest that they or liabilities that they own to local businesses, banks, for example, interest rates for bondholders also, and not so much on what they owe to the international markets. And this very, very quickly could lead to a situation where we see a ripple effect, and the ripple effect would be stock markets going down. And if we see really the S&P 500 here going down by 5 or 10%, we would see minimum the same going on in Bitcoin and other cryptocurrencies. But at the moment, we don't see that one. This is a classic so-called risk-off scenario, which would mean stocks down, cryptocurrencies down, the US dollar becoming stronger. So that would mean, for example, euro, US dollar going down, because that means the US dollar is becoming stronger. We've seen that slowly with a dip here under 117 at the moment, but it also would mean precious metals rising again. And I said this last time, really in a risk-off scenario, I would expect gold here to attack 2000 again. I would expect silver to attack 30 US dollars per ounce again. We're not seeing this at the moment, so the market is a bit in a limbo there. Nobody really, everybody is waiting there. Is there a solution? Is Evergrande going to default? Is the Chinese government concerning the offshore liabilities going to somehow step in and save it? Or is, are the market mechanisms taking over and so-called economic nature is going to take its course? We don't know yet. What we know is, however, that we are in a sentiment for cryptocurrencies of extreme fear at the moment. So anything pointing into a bad outcome from that direction would result for sure in an attack here of that zone of 40,000, potentially 38,000. Luckily, this is also the zone where we have a very, very strong support. So we are still seeing a lot of coins that were bought in this upward move here back then that are still not spent again. So people, long-term holders, are still holding on to these coins. And naturally, normally, what you will see is, if the market is in a state of extreme fear, that is just a matter of time until it dips into the other direction again, which would, in this case, and this is very hard to believe at the moment, I'm very well aware of this, but it would lead to the markets, going up again. And honestly speaking, I wouldn't be surprised if we are surprised and see a beautiful October with Bitcoin attacking maybe 50 or 55 or even 60,000 again. Time will tell. For sure, we are going to cover this in more detail in the future for you. For now, be aware the market is very fragile. Once again, we are in a make it or break it situation. For your daily trading activities, this means keep your stop losses tight. Don't leave your positions on the market without a stop loss. And most important of all, also, please stay healthy and safe. We are going to see each other again tomorrow. Have a good one. Bye-bye.